Hello, this is the chart profit video. Friday 15th of July, shortly after the open. This is from the pre-open today. I was drawing your attention to these intraday bias numbers, as I call them, here and here. These big positive numbers indicating intraday buying on these 2 days. Actually, these two are high conviction aggressive buying days. You can see the green at the top here. So you usually see high numbers here on these high conviction days, and then for the last 4 days, different type of day. For instance, here on the 11th, session opened higher, and actually if you look at the numbers there, we've got negative numbers indicating a net intraday selling bias. No significant selling, which would be red marked on that day, but intraday there's a bias towards the sellers, but ineffective because you see a higher value area. So we opened higher, a net selling day, but ineffective. And as I've said in the pre-open today, describing both these types of days, both are common in uptrends, and you can see again on the Tuesday similar thing. Session opened higher, the net bias during the day was selling, indicated by this negative number here. Sellers ineffective, and again this is an overlapping day, same sort of thing. And Thursday, same kind of thing again, negative number here, and intraday sellers once again ineffective. So for the last 4 days we've marked no significant buying, that would be the green, but sellers have had an opportunity, but they've been really ineffective in their activity. So no effective activity from the sellers, and significant selling, as I said here, has not been marked for 13 days. Here's a live chart, hourly chart of the E-mini S&P, my favourite chart, and you can see, as yesterday's price action, we're currently printing about 2160. I've got a minor upside target for the week around 2175 if we get there. But we still wait for a markable response from the sellers. Look here at the market chart through Thursday, showing the daily breadth indicators. The net new highs 25 indicator 5-day moving average in black here above 0. And the percentage of stocks greater than their 50-day moving average in the New York list, well above 50, very high actually. And that gives us this middle green line here. So we have a positive or supportive breadth indication here. The momentum in the bottom here is up through 0. It's positive, that's trend up. So actually for the last 5 days and heading higher. And we've got green on the chart here, so healthy looking breadth chart, 209.90, the major time support now for the spider, which we're looking at the top here. So strong price location, strong breadth, momentum is up, all looks pretty good. No sign of the sellers, getting a little overbought on the technicals. There's some minor concerns in the sentiment indicators, which we'll look at next. First of all, I mentioned pre-open today that my version of the Ridex assets ratio was higher yesterday at 5.97, and that is a 6-month high. It's a 6-month high, you can see it here on the chart. So we've just spiked up a little bit here above this line, which represents the highest ratio for the last 6 months. But still relatively, compared to the last year or two, a reasonably low number, just around 6. This is still definitely worth noting though, it's a contrarian indicator, and we're on a 6-month high. We've been saying from the February low actually that this indicator has really been slow to pick up. Maybe this is the first sign of it. The market's really rallied strongly, and the Ridex ratio has remained relatively subdued below 5. So in the bigger picture, a reading of 6, maybe not too much to get worried about, but as I say, it is a 6-month high. Looking at the bull fund assets in isolation, you can see they've just picked up a little bit here, but the bears have stepped back. You can see if we look at the bear fund assets in isolation, this reading here is the lowest since December. So less bears in the Ridex data for at least 6 months. Also mentioned the VIX today, that printed 12.14 intraday on Thursday. That's the lowest since August last year. VIX currently indicating quite a level of complacency in the options pricing. VIX down around 12, like here, has been the kind of reading you get over the last few months before the market sells off on its own. I don't trust it, but it's certainly worth noting. Don't see too much to worry about. In the public poll from AAII, bulls percent was higher this week at 36.9, bears lower at 24.4. 4-week moving average of the net in black here, just around flat. But here's the investors' intelligence poll. Bulls percent here was higher, 52.5, and that is the highest bulls percent since May last year. If we look at the net, the bulls minus the bears at 27.8, that's the highest since July last year, and the 4-week moving average of the net at 23.12 is the highest since August last year. And we noted that 4-week moving average of net climbed above the April peak, which was here. It's often a trigger for lower prices. We had a bit of a sell-off here when that happened. Markets quickly recovered, but we are pushing out to a higher level in the indicator this week. So definitely there are bulls emerging here by long-term measures, not critical extreme readings, but they are the highest for quite a few months. And Lipper US fund flows, they reported equity fund including ETF inflows of 7.8 billion in the week to the 13th of July. That's the largest single week inflow this week since the start of the year. That's that little red bar here. So this week we've had the spider here on the live chart breaking out to new all-time highs, as did the diamonds. Late last week the Russell 2000 ETF IWM broke above its major point of control at 115.35. As we said at the time, that put it in a really strong price location, and we've surged again this week. Qs remain in a strong price location as long as it holds above 105.13, which is a major point of control and an important halfway point. T-bonds, this is the T-bond ETF, TLT, sold off a bit this week. We seem to have been in a risk-on mode for the last few days, and the bonds have come back a bit, as has gold. This is GLD, the gold ETF. Longer term, as long as it holds 118.22, this level here, the major point of control, it's in a strong long-term price location. It's an interesting chart. This is USO, the oil fund ETF. The 9-month point of control was at 11.70. It was previously at 10.78, and that's where it's back at now. It's just migrated down again with this price action this week. Just spent enough time at that level to migrate that point of control back down there. Just from looking at the location with regards to the distributions, it kind of makes sense to me, and therefore I think it's a really important level. So if we see USO printing below 1078 down here, that would definitely be weak price location and indicate lower. So this is now our critical level to follow, 1078 on the oil. Okay, the dollar index from the high in December over here to the low in early May. We have this dotted halfway point here, and we've seen the index sort of oscillating around that level over the last few weeks. Important bit on this chart is that the 2-year is at 95.25, and that is big support, and this consolidation has all taken place above that level, which usually indicates a strong pattern. And we have this halfway point now to think about. Then as far as resistance goes, we're pretty clear. If we can see a sort of higher low above that level, probably see the index higher, but right now from this analysis it's actually in a strong price location here. We're looking here at the pound dollar. This is a distribution chart, and we can see here, let's call it the Brexit high before the collapse over here, and I've just created a really short term based on 5-minute bars price distribution. Showed this last week. 132.87 is the point of control, and just late this week, Thursday, after the Bank of England kept rates on hold, we saw a rally in the pound. Above that level, there's a bit of volatility here, some oscillating. This is an hourly chart, but there's that level. We held it after the spike, following the interest rate hold, and we're back on that level now. If we have a strong chart here which wants to go higher, right now imminently we want to see this level hold. Price back underneath there would be a failure of price to indicate strength here. Looking at the Euro FX chart here from March last year on the low, we've got this halfway point, which is very local to where we're printing, almost exactly where we're printing at the moment. Below the 4-year at 113.13 up here, so longer term is a weak price location. We want to see price back up here. We're looking at long-term upside but it would do itself a favour by holding this level and just moving back up to that point of control at the moment. Price down here, indication of weakness. You can see back over the last year and a half, I'll just zoom out a little, we've gone into a kind of range here, and it would take price above that level 113.13 to indicate real strength on this chart, I think. Looking at the Aussie dollar, the major point of control, spot 76.50, and you can see where we've had resistance here. In June we're back at that resistance again. Now this is major resistance. We did have this test up here earlier in the year, which failed. If we can see some consolidation above that major, that would be a real positive for this chart. Currently we're a little overbought, but price here would be a much stronger location. Dollar yen chart has fallen to some important levels. We had a kind of vacuum. We had some important levels up here on minor points of control a bit higher, and between here and this support there was really nothing. We've actually reached that support now. It's long term, so I've zoomed out here onto a weekly chart, and we're looking here at the low in 2011 to the subsequent high. The important halfway point has been reached here, and we have a 4-year point of control just slightly above that at 102.32, and currently here on the daily chart we are back above that level as well. Price below these two levels, basically at a new low for this move, would break that support and put the dollar yen in a really weak price location, but currently we're seeing some strength here off that support. And finally here we're looking at last week's ebook. We're looking at the Spider weekly structure. Each week we try to ascertain who was active, the buyers or the sellers, were they effective. You can see in mid-June we have 2 weeks of sellers active, followed by a week of ineffective buying activity, and then last week for the first time we saw buyers active and effective. Just going to change the time series here in my charting application so we can show the holidays and the weekend, and we can have a look at what's happening this week so far. If we look at the data at the end of this week, got a little bit of weakness off the open today, but as long as we close above Wednesday's high, we will have another week of effective buying activity. Okay, that concludes. Once again, I wish you a good weekend, and thank you for watching.